In this video, I'm going to talk about how to manage a winning trade. Stay tuned. Hey traders, a very warm welcome to you. Okay, imagine this. You've got a trade, it's gone in your favor. How do you know when to come out of it? Some people are advocate of the trail method, i.e. they pull a stop up tight to the trade, let the price come back, take them out of the trade. Others are fans of the target. They've done their analysis before the trade. They've set a level they want to come out at. The price is going to hit that level or it's not. Let's look at both of those. Let's look at the downfall of both of those. And then maybe let's look at a hybrid strategy, the potential we could use to manage the trade. Now, our objective, of course, when managing a trade is to give the trade enough wiggle room, if you like, to allow for noise, but yet still come out at the best possible price. Almost impossible to do both in exactly the maximum amount, but we want to try and get to the sweet spot as best we can. If we imagine a price moving up, if it moves up in a straight line, life's easy, right? We know that this doesn't happen, guys. If we're long, the price is going to pull back at some point. It might have an attempt to go lower. It might mess around a little bit. Whatever. We know that the multiple different types of pricing structure we can get in a trade means that we've got to do our best to kind of refine it. So let's look at trail. So the first thing we do with a trail is to say, hey, let's trail up on a moving average. Very simple strategy to do. We could use a 20 period, a 30 period, or whatever it may be, depending on our time frame we're trading. Even if we're being very aggressive, like on a day trade perspective, we could use a 5 or a 10 or something literally for that burst. Again, it depends on what type of trade. If we're buying a breakout, we're looking just for that explosion. We're going to want it a lot tighter. If we want a swing trade, looking for a 3, 4, 5 day move or 3, 4, 5 week move, we're going to be a little bit more broader with that. So, but the trouble we have with the trail is that we get taken out by, if we're using a moving average, we're going to get taken out probably on something like this, which is actually genuinely an opportunity to buy if we're getting the first pullback. If we're too tight, the first pullback after an explosion. Actually, let's use that as an example. Should have explained that better there. Let's use an example that we're buying this as a breakout here. We could use any strategy we like, but just for this example, if we're using a moving average trailing, generally, if we're in on this, the first time it comes back and tags that moving average is going to get us out of the trade. In reality, that's time when you want to be adding to the trade or definitely not coming out of it. So, you know, what do? Do you have it a little bit wider? But then, of course, the wider you have it like that, on the longer period moving average, price could go rocket to the moon and you're not going to come out until it comes right back here. You could be giving back kind of 30% of the gains of the trade. That's not so good. So what do? The other thing you can say is to say to yourself, okay, well, I'm going to use a target. Let's get my trusty whiteboard rag here. You could say to yourself, okay, let's have a target. So you kind of draw your price on, you say, right, there's my price target here. I've bought my breakout again here, whatever it may be, I'm in. And it doesn't matter what it does, right? You've got a target. This is your target right here. Ding, ding, ding. It's got to hit that. You've got maybe got a limit order in, or maybe you've got an alert set, whatever. It doesn't really matter. The point is now price can do whatever it wants up to that point. Doesn't matter. There's your target. Your stop is maybe down here, whatever. We'll talk about stops now. But it can do whatever it wants. It goes there straight away. You're happy. If it takes a while to go there, you're happy. Now, but what happens if this happens, guys? It just misses it and starts to come down. What do you do then? Now, people may say, oh, you've got to be strict with your strategy and say, oh, that's your target. Your target's there, it doesn't get hit. You've got to, you know, have it come all back down to your stop. Doesn't make any sense, does it? It's got there. Let's say it's 10 ticks away from the target, or, you know, if you're swing trading 0.5% away and it's already moved 20% in your favor, are you really going to give back that full 20% gains for the sake of making one more little burst? You're not going to do it. It makes no sense to do it. Now, okay, I know that people are saying, well, you've got to stick to your limits, you've got to stick to this. Yes, but then there are times when it just doesn't work out, doesn't make any sense. You would never go into a trade risking, say, you know, talk about in a tick perspective or pip perspective, 10, you know, or sorry, targets of 10 and risking 200. You just wouldn't do it. It just wouldn't make any sense to do it. And that's exactly what you're doing at this position here. If you're in this trade right now and you're 10 pips away from target when your stop happens to be 200 down, that's exactly what you're doing. So it doesn't make any sense that either. So what's the answer? We've seen that there's a weak spot with the trail. We've seen that there's a weak spot with the target. Well, we've seen benefits of each. How about a hybrid of both? And by the way, guys, let me know in the comments below your thoughts on how to manage a winning trade. I'd be interested to see, your perspective, and everyone's different, and also it depends on the type of trade you're doing as well. But this example, let's just go with the standard kind of breakout momentum type trade that many of us do on a variety of time frames. So what about hybrid approach? So we've got the trail, got the target. Let's use a bit of both. So we've got this breakout here. We're all happy. We're all in here. What about if we have a situation where we trail and target, so one or the other? So we have our target, final target up here, and that is a target that we've analyzed based on our technical analysis. Maybe it's a prior level of resistance. Maybe it's a gap fill from multiple weeks ago. Whatever it may be. We're not going to go into that. But you get the idea. You've got a target for whatever perspective it may be. So if it hits that, fine, you're out of the trade, all well and done. But what about if it starts to come up? Is there a point where you start to bring your stop up? Something you can do, you can either have a stop that comes up as the price goes up. So maybe you have a trading stop of 50, 60, 70 pips, and you're moving that up kind of behind the price, and hoping that that's enough flexibility that if there is a little bit of noise, I'm switching colors all over the place here, if there is a little bit of noise, it's still going to keep you in the trade because it's not going to pull back more than your 70 pips and ping you out. So hopefully that will then bring up, price will come up and tag that. If it doesn't, at least this is coming up with it. So if it gets close there and pulls back, you're still taking a good chunk of the profit as opposed to letting it come all the way back through. Another way of doing it, guys, is to, let's get rid of that. Let's keep this broad thing on here. Another way of doing it, what we could do is to say, all right, once we kind of get to a level, I want to now bring my stop up when we start to see a support. So a ratchet system, instead of kind of ratcheting it as price moves up 10 ticks, your trailing stop moves up with it like this. You're saying, okay, stop stays there as the price, I can see this on video, as the price moves up, it gets to that point, then I ratchet it up. So you kind of lock in gains when it does something to indicate that maybe that it's kind of happy with that level. And that could be something like this. Maybe I'll redraw this so it's a bit clearer. But what I really mean is some sort of price action that says, hey, we could have a new high here. We could be consolidating a little bit here. So something like that, perhaps. You have a support that comes in, you've got a double bottom, you've now got a new support, you then ratchet your stop up and say, okay, my stop is now under that support. So you're actively managing the trade. You still have your ultimate target there, but you've got certain things that you look at that you can say, okay, if I see this, I'm going to ratchet my stop up. If I see kind of some sort of cluster of support, cluster of price, I'm going to use that as a new support level, or I'm going to use it with a moving average as well. If I see a little bit of an explosion, I'm going to kind of ratchet my stop up with it. These kind of different things, guys, you can do a hybrid of multiple things so that you're not, stuck in it and getting frustrated if it's not quite hitting your target. You're not kind of leaving a lot on the table when something suddenly blasts off into the distance. And then one final thing, you might even say, okay, if we suddenly get an X% move in 10 minutes or X% move in a day if you're swing trading, I'm going to take it because that to me is the final exhaustion of the move. I want to come out into that. So you can add another kind of layer or another rule onto the trade. So some ideas for managing the winning trade. I think the best thing is to use a hybrid that suits your style, your strategy, trail, target, ratchet system, whatever it may be. Let me know your thoughts in the comments below how you manage a winning trade and how you think the best way to kind of run that trade as long as you can while still giving you a little bit of room, a little bit of wiggle room so you're not getting taken out on noise. Good trading, guys. Take care. See you in the next one. Bye-bye.